Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a look at the current state of the market, and there's no shortage of news to discuss. Recent comments from Fed officials have sparked concerns about the potential for interest rate hikes, and investors are eagerly awaiting the next move. Meanwhile, earnings season is in full swing, with some major companies reporting strong results while others have fallen short. In other news, the Indian government is gearing up to release its latest budget, and experts are weighing in on what it might mean for the country's economy. Edelweiss Mutual Fund's CEO recently shared her thoughts on the upcoming budget, noting that the government may focus on increasing capital expenditure, particularly in areas like defense, infrastructure, and manufacturing. She also highlighted the importance of job creation and technology-linked sectors. Of course, no discussion of the market would be complete without mentioning the ongoing challenges posed by capital outflows and foreign investments. The rupee has been experiencing some volatility, and investors are keeping a close eye on the situation. As we navigate these complex issues, it's essential to remain balanced and informed. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest market trends and analysis. Today, we're looking at an interesting development in the world of finance, where Bitcoin has held steady despite a significant drop in gold and silver prices. According to recent reports, gold has fallen nearly 9% to $4,875 per ounce, while silver has plunged 28% to $82 per ounce during the New York trading session. Meanwhile, Bitcoin has edged up 0.2% on the day to $83,873. This sudden move is likely a sign that traders have rapidly repriced expectations around interest rates and liquidity, a shift that tends to hit precious metals hardest. The nomination of former Federal Reserve Governor Kevin Warsh to replace Fed Chairman Jerome Powell has also set off a dollar rally, with the U.S. dollar index climbing to 96.94, the highest it's been since the start of the week. It's worth noting that Bitcoin's stability in the face of declining gold and silver prices may be due to its unique characteristics as a digital asset. While precious metals are often sensitive to changes in interest rates and monetary policy, Bitcoin's value is influenced by a broader range of factors, including adoption rates, regulatory developments, and investor sentiment. As we consider the implications of this development, it's essential to remain neutral and avoid making predictions or taking a biased stance. Instead, we should focus on providing a balanced analysis of the market trends and allowing our listeners to make their own informed decisions. The Crypto Fear and Greed Index has dropped 10 points to 16 in the past 24 hours, indicating that traders are still in extreme fear mode. However, some investors are growing bullish again as Bitcoin ticks back up, currently giving the asset 57.5% odds of rising to 100,000 rather than falling to 69,000. As we move forward, it's crucial to keep a close eye on these developments and consider multiple perspectives before making any investment decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at Oracle, a company that's been making waves in the cloud computing space. Now, I know some of you might be thinking, Oracle? Isn't that just a legacy tech company? But bear with me, folks, because there's more to this story than meets the eye. As we've been discussing, Oracle has been investing heavily in its GPU as a service, GPU as offering, which is expected to drive growth in the cloud computing sector. And while Morgan Stanley recently lowered its target price on the stock, citing short-term earnings headwinds, Guggenheim analyst John DiFucci remains bullish, maintaining a buy rating and a 400 price target. Now, I'm not here to make predictions or tell you what to do with your money, but it's worth noting that Oracle's bring-your-own-chip business model could be a game-changer in the AI data center space. And with its recent partnership with TikTok, Oracle is well positioned to benefit from the social media giant's cloud computing and infrastructure needs. But, as with any investment, there are risks involved. The company's debt load and dependence on OpenAI are concerns that investors should carefully consider. So, it's essential to approach this stock with a critical eye and do your own research before making any decisions. As we always say on the Riskwiser Zone, it's crucial to be informed but not emotional when it comes to investing. And with Oracle, it's no exception. The company's long-term growth potential is undeniable, but near-term headwinds could impact its stock price. So, what's the takeaway? Oracle remains a long-term cloud computing story, despite near-term challenges. If you're a patient investor looking for a company with immense potential, Oracle might be worth considering. But remember, high risk often comes with high reward, and it's essential to weigh your options carefully. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.